Right. I think now you're good to go. Ladies and gentlemen, good evening. Once again, my name is Basweti. Other people call me Coach. So this evening, we're going to resume our usual Sunday weekly forecast sessions, which we normally do them for free every Sunday. We also stream them on YouTube. For the purpose of learning and elevation, I'll do a recap of last week's movements, especially on gold and GU, and then I'll jump into this week's session. So if you are here and ready to learn and maybe ready to see how we view our market this evening, please go to the chat section and drop a fire emoji. You can comment anything, whatever you feel like commenting on the chat section. Please do that for me so that I can confirm we are active and ready for the session tonight. So in the meeting, I can see Mr. Veli is around, Abraham, Amon, Ann, Mr. Ben, Charles, Esther, Elias, Elvis. I can also see Faith. There's Said, Humphrey. I'm able to see Jennifer, Waweru, Kerubo, Mr. Mark, a very good trader. Mary, Masinde, Maureen. Wow. Irene. Can also see Titus, Willie. Somebody is calling him or her ZZ. I don't know who's that. Anyway, so without wasting much time, it's very important to know that for you to be a consistent, profitable trader, there are things that are very, very important. You need to really understand what exactly you are doing in the trading industry. And of course, if you treat this business seriously, you're also going to see serious money, right? So uh, last week, uh, on Monday, we were supposed to do our analysis on Sunday, but unfortunately, we didn't manage. So we did our analysis on Monday morning. And when we were doing our analysis, I remember this is where we had gold. Going to go back in time just for the purpose of also learning. So this is where we had gold last week when we were doing our analysis. And the first thing when you're doing your analysis as a trader is to, first of all, get to know what we have on the economic calendar. So the first thing is always to check on the news. After checking the news, you need to understand the direction of the market structure. So the first thing is always direction. When you're talking of direction, you need to either identify the direction of the market in terms of, are you going to buy or are you going to sell? And when I'm talking about direction and buying to rather selling, it takes us to the aspect of market structure whereby you need to identify if the trend is bullish or bearish. Depending the case scenario, whether you are a scalper, whether you are a swing trader, whether you're an intraday trader, you need to also understand the aspect of time frames to consider when you're breaking down your charts. So last week, this is where we had gold, I think on Monday morning. Let me check. Yeah, on Monday morning, I think. Yeah, this is where we had. It was on 11th or 12th, I'm not sure. But this is where I believe we had the charts playing. So when you were checking on 4 hours and time frame, 4 hours and 1 hour time frame, we clearly had this level as an area of consideration to see price come to react on this area, because this is an impure level of liquidity. And below it, we also had this structure, which price came to tap on, remember, on Friday. I hope you guys can hear me. Please, in case I am not audible or in case of anything, please, Veli or Esther, you'll be my moderator. So we had these levels. Before price started delivering on throughout the week, and we were looking forward to see the market come either to react at 46.39 or go lower to there is an area of liquidity between 45.80 and we had 45.50. So those are the zones that you're looking at to see how price will deliver for us to buy. So as far as I'm concerned, I was looking forward to either buy from 46.39 or go lower and also buy. So what actually happened throughout the week, the market was able to come and tap on this level. Let me show you. Price came and tapped on around 46.39 and we had good buys. Just a little bit. So price came, tapped. Okay, before price tapped on the 46.39, first of all, the market came and took out this low, that low 46.61. And that was a clear indication that we were going to sell. In fact, even before this reaction, we had these areas, our last break of structure. Just label it very well. So at this level as our BOS. And then from this break of structure, we had this high and then this low. Yeah, so we had this low. And price confirmed that we were going to sell after this section was broken. Probably, I mean, this low of 46.61 was broken by the body candlestick closure. It was a clear indication we were going to continue selling. We had also an internal structure that confirmed bearish moves to go and fulfill the 4 hours, rather the weekly areas of liquidity. So this is where we had our shift. We also had, all these structures are internal structures. So later on, I think on Tuesday and Wednesday, price went, took out that high, came lower, and started creating some structures. We had these structures here. So we had this low and it's high. So then price came and did a shift. Price did a shift. After doing the shift, I remember we spotted these intraday swing sell. I remember we personally, I took these cells. It was around 47.12, I remember very well. I took these cells, and this trade delivered to me around 1 to 14R. As you go on with this analysis this evening, probably that those people in this meeting who doesn't understand how we trade, I'll try to talk about a few things. I know that people believe that gold should always have a stop loss of 100 pips, but for me, I believe gold should even have a stop loss of 20 pips, just like any other pair. But as a trader, there is the aspect of adaptability. You need to understand when the market conditions are changing. You also need to understand, you need to have a mechanism on how you're supposed to adapt based on how price moves in different seasons. So price came after doing that shift, there's the aspect of liquidity consumption. So when I'm talking about liquidity consumption, once price breaks structure, the market has got a tendency of going back to retest an area that caused a high or a low. And when I'm saying that in this case, I'm talking about these. You see these structures. Price came, tapped, consumed those structures, went down again, came back, tapped these structures. This was the last area that was left by the time we were spotting this opportunity. So this was the last area that was left for us to see price come, tap on it, and maybe continue selling, all right? So based on our strategy, when we did our refinement, the market came, tapped on that area based on the lower time frame. We have what you call pure bearish structure, levels. That's where actually price came tapped. After tapping on that level, we see the market selling. Whoever is Harris, somebody, please make sure your mic is muted, guys. Kama unajua you're not supposed to speak, make sure your mic is muted, please. Don't square na makelele mingi. All right, so price came tapped on that level. Going just to do recaps, and then we jump into analysis for for this week, right? So price came to this level. Tapped on that structure and went all the way to our levels on 1 hour time frame where we had failed liquidity engineering, which was a flip level, right? So we had a flip level here. This is an example of failed liquidity engineering. That's why actually price tapped on that section and pumped up. As far as I'm concerned, when the market was coming back, there are some liquidities that were not yet consumed. If you check on 30 minutes time frame, when it comes to liquidity consumption, we have percentages. We have 50%, 75%, and then 100% liquidity consumptions. So we had this level as well. As much as price tapped on it, we had deeper levels that were not yet consumed. So later on Tuesday or Wednesday, I think on Wednesday, this was on, on Wednesday, price came, created another high, and then after creating that high, this one here, the market created a structure here, which to me was like a break, rather a shift. And then on this shift, if you narrow down to the lower time frame, we also had impure liquidity plus flip levels. We had impure liquidity plus flip levels. And that's where eventually later on, throughout the week, I think it was on Wednesday, I know we had a lot of ranging and consolidation on gold, probably Thursday and Friday, if I'm not wrong. So just a moment. So kulikuwa na hii level, price ilikuja baadaye, and you could see the market coming to trigger on it. We had some slight sells, and these sells, based on the intraday levels, price was coming to consume this structure, because if you understand the aspect of continuational moves, pullbacks, reversals. So on 15 minutes, okay, on 1 hour, we had a shift. If you narrow down to the lower time frame, you're going to see, okay, on 1 hour, we call this a week overlap, which is a key level. This one, for the intraday perspective. But for you to see much information, you need to go to the next time frame, which in this case is 15 minutes. That's why we had this structure. So if somebody was taking these fast sales, I remember Veli had these nice sales. So Veli had these good sales from here. And if you measure the pips from this level to this, that was like 360 pips. If you're having a stop loss of 50 pips, that's almost an RR of around 1 to 7, if I'm not wrong, right? 1 to 6, 1 to 7 there. So price later on came tapped. After price triggering this level, the market went down, and later on, price went back to consume the liquidities that were left. That is after almost another day. So ikafika on, this was on Thursday morning, price triggered, and then gold delivered the sales to our extreme area of liquidity, which is where we are. So today, as the week ended, I know so many people were trying to look for buys and they were taken out. Probably this was on Friday. Na watu wengi walijaribu kutafuta buys hapa na waliokotwa. That one is for sure. I know so many people were taken out this level because of this kind of transaction. If somebody is making noise, please, whoever is making noise, mute your mic. Simple etiquette. Once you join a meeting and you know you're not supposed to speak, just mute your mic so that we can have a smooth session. If you repeat now, I'll remove you from the meeting. Related instructions. Anyway, sorry for that. So price came to this. So I want to delete all this. And now we're going to jump into our analysis for this week. But before that, our rituals, we have to check on the economic calendar. Then I'm going to continue the analysis. So this week, it's the week of 18th to 22nd. So we're going to have, tomorrow being a Monday, we're going to have a bank holiday for the Canadian dollar. And then on Tuesday, we shall be having news for the pound. That is 9 a.m. Then 3:30 p.m. That is 8:30 a.m. New York time, 3:30 p.m. Kenyan time. We're going to be having CPI for the Canadian dollar. So if you're trading any pair that has got CAD, remember we have CPI on Tuesday. Then on Wednesday, we shall be having CPI for pound during the morning session, Asian London. And then Wednesday is very important because we're going to be having FOMC meeting minutes at 9 p.m. Kenyan time for the dollar. Then on Thursday, during the Asian session in the morning, we're going to be having employment change for Australian dollar and unemployment rate for Australian dollar. And then later at 11:30 a.m., we're going to be having flash manufacturing and service PMI affecting the pound. That's how basically the economic calendar looks like for this week. So if you're trading either of these pairs, make sure you check on what we have. If you're trading prop firms as well, make sure you always check your economic calendar, because most of the prop firms, they have got these rules of don't execute trades during the news time and all that. So make sure you're always keen when it comes to that. And then as the day goes by, make sure you always get updated about the news that are coming up. Like if you check today, 9 hours ago, US-Iran stall on Hormuz reopening as oil supplies tightens. So go and read this, get to understand what's happening. That's how you don't get surprised when you see the market opening with gaps. You're wondering what's happening. So make sure you go and get updated on that. So after that, we jump into the dollar index because you're trading. Jump into the dollar index because you're trading the dollar pairs. All right, so we're going to check on the dollar index. We start with DXY. Okay, so when you look at what we have, it's important I mention these guys. It's important I mention this before I jump into that. So as a trader, there are things that you're looking for in the market. Either if you're a let me start with a swing trader. Swing, then opportunity to intra, then we have a scalper. So there's the aspect of time frame. So allow me also to talk about that. So there's the aspect of time frame. We have the constant. Under the constant time frame, it could be, okay, I'll list all the cycles down here. Let me start with monthly. Monthly, from monthly, we have weekly. From weekly, we have daily. From daily, we have 4 hours. Then from 4 hours, we have 1 hour. Those are the cycles when it comes to analysis. So if you are doing swing trading, you're going to focus so much on monthly, weekly time frame, right? If you're doing intraday, you're going. Let me just mute everyone kwa sababu naona kuna watu wanaleta mchezo. Just a minute, guys. Okay, perfect. So I'm saying this, if you're doing analysis, when you're doing swing trading, monthly, weekly are the time frames that you need to focus on. Let me mention this, it's very important. Let's say, for example, you've opened your charts on a weekly chart, or rather maybe your monthly chart, you find a structure that looks like this. So clearly, if this was your high, let's say this was your higher high. Let me say higher high. And then price pushes to the upside. So you have a week here. Then maybe you have another week hapa chini. So you know very well in this case scenario, This is going to be your BOS. This is going to be your bullish break of structure. Then on the candlestick closure and opens, this is going to be your validation point, and then this is going to be your invalidation. So this will be your validation point. Validation. Just a minute, middle right. So this is going to be your validation point, and then this is going to be your invalidation point. There's a reason also I want to mention this. So as a trader, you know very well, umefungua chart yako monthly, ama umefungua chart yako weekly, umepata kitu kama hii. What are you supposed to do? This clearly, you know very well, you are on a bullish trend. Uko on a bullish trend kwa sababu tuko na break of structure ambayo imefanyika wapi? Hapa. So you are on a bullish trend. So since this is monthly or rather weekly, it means it's going to take a lot of time for price to do what? To come all the way, sorry. It's going to take time for price to come all the way, maybe back to this level before it goes to continue to buy. You will know very well what you're supposed to do. You know very well is that as much as this is a pullback, as much as this is going to be a pullback, this one here, as much as this is going to be a pullback, it's going to be a pullback that is a swing trade. Because if it's monthly or rather weekly, it's going to take a lot of time before price comes maybe and consume areas of liquidity that are deep inside this level, right? So you have to note that. Now, when it comes to structure, you need to know how to map your structures with well-coordinated time frames so that you know where to enter, where to put your stop loss, where to put your take profit, and so on and so forth. So the first thing that is always very important when you're doing your analysis is direction. Are you guys following? The first thing is always direction. Once you know the direction, you're good to go. Now, as you're doing this weekly analysis, you're supposed to identify direction of different asset class or other pairs that you're going to trade. And then we're going to look for our swing points for swinging. And then, of course, once you know the direction, maybe if you're trading gold, if the direction is bullish as our main move for the week, in between, we shall be taking intradays towards the direction of the trend. Sometimes, of course, if let's say, for instance, in this case, the same structure that I've shared, this one here. Just a moment. See this same structure that I've shared here. Let's now look at it as a, my goodness, sorry, just a minute. The same structure that I've shared, sorry. If this structure, let's say this is daily time frame, that means you're going to use 1 hour time frame and 4 hours time frame to look for intraday levels, right? Are you guys really following? You know, when people are silent, sometimes I might be making noise and maybe I'm just alone. Are you guys following? Let me know in the chat section. Let me have reaction to the chat section, please. Are you guys following? Confirm on the chat section with emojis, reactions, that I know we are together. Okay, thank you. Sharon, Mark, perfect. So, enough to 11, perfect. So, enough to understand, when you're now doing intradays, when you're on the daily time frame, you're going to use 4 hours and 1 hour time frame to either take continuational pullbacks to these levels. All of these movies are pullback, but on the lower time frame, you can add entries so that you can come and fulfill this area of liquidity. Then we continue with the trend. So direction is very, very, very important. Direction is very, very, very important because once you miss on direction, directional bias, you might be cooked the whole week. You're just wondering why you buying, the market is selling, or you're selling, the market is buying, because you have when it comes to direction, you are wrong. So that's the most important thing that you're supposed to focus on, identifying the direction. So now I can go to we can now start looking at the dollar index. We can now start looking at the dollar index. And I always say that market structure is everything. Market structure in a communicate. So when you look at the dollar index, let's start with monthly time frame before we go to the daily time frame. So look at this. From this is 2025. On the monthly time frame, price has been ranging between 100 levels and 95, let's say 95 levels. This was like, it's like a whole year, right? Now, there are areas that are very significant when you're doing your analysis. In this case, we have this key level, that is 103. We also had this key level, which price has tapped a couple of times, that is 99 level. After that, on the upper end, we also have this key level of 106, right? From the downside, we have this key level of 96. From 96, I'll probably say we have another key level here of 97, right? So those areas are very significant. Like for instance, then the 103.6 level, if you go to lower time frame, you're going to find structures here. You're going to find structures here. Even these ones, ukienda kwa lower time frame, you're going to find some structures. So if you also check on the weekly time frame, these areas that were weak overlaps on the monthly time frames, you realize you're going to have structures. The people trade order blocks. You can see we have an order block here. This is simple price action that is bearish, engulfing candlestick. We also have another structure here. So this one, in our strategy, we call it, it's a special case of type of liquidity. That is type 5 area of liquidity. So higher time frames are very important. They will help you to spot zones that you expect the market to react from. Now, when you come to the daily time frame, of course, from the weekly time frame, this was the last high that we had. And okay, let me draw it properly. This was the last high we had in terms of technical analysis. This was the last high that we had. And from this high, price came and broke this low by having body candlestick closure below it. So this is like a BOS. This is like a break of structure, bearish break of structure. Then probably you can call these, let's call these our high swing. Okay, swing point, major swing on the most recent structure. We have that swing point, and then we have that break of structure. And if you stretch to this level, whereby we have some sort of a type of liquidity as well, the market has tapped on this level a couple of times. And you know very well, once price taps on on a certain zone, many times that area becomes weak. Are we together? Now, let's move to the daily time frame. Let's move to the daily time frame because that's where my interest is. When you look at the daily time frame, above this area, we still have areas of liquidity that have not been consumed. And I'll probably tap on this. And from that area all the way, okay, we have this invalidation point and we have the extreme one. So hiyo area haijaguzwa. So tukikuja kwenye daily time frame now, we focus on these structures. The market has been forming a series of higher highs and higher lows. So we have this. Then we have this low. We have another high. It's low. Another high. Then it's low. I hope that is clear, guys. I hope you're following on well. Now, clearly, when you mark the highs and lows, we'll probably say that we have, all right, there's this high, and okay, we have this structure here. This is the right low. Let me see if price really broke structure to the upside. We don't have a body candlestick closure above that, so then that means our valid low is this one here. This is our valid low. If you mark structures wrongly, you're going to mess up your analysis. So you have to, although they are different, we normally say price is fractal. So we need to know how to do this right. So we have that low, and then this low has been taken. That's a clear indication that price has done what we call a shift in terms of price. It's like some sort of signs of the people who use the word change of character. And then in between, we have this structure. We have this structure. When the price was reacting from this level, we could see some sort of BOS. Let me see if I can check on the other broker. The candlesticks zinakaa funny. Anyway, let's just use Tickmill. So ukiangalia hapa tuko na this. So we have some sort of BOS. If I go to the line graph, you'll see it clearly. We have some sort of BOS, the downside, and then on the same time frame, so we have a BOS here, and then the candlestick here last week, that was Friday, imevunja hapa juu. Hiyo ni a clear indication of shift. So we're expecting to see this price pushing up. We're expecting to see this price pushing up, probably to come to this structure, which was created before we could see crazy momentum to the downside. Are we together, guys? And that's telling us that we're going to see dollar to continue buying probably to this level, maybe before we see the market coming lower. You know, when you're viewing the market from the higher perspective, it also takes time to consume liquidity. Before we start breaking and moving up, price doesn't move in a straight line. It moves from areas of liquidity to areas of liquidity. To me is like a magnet, you know, liquidity to me is like a magnet. So we have this lower level, which has not been tested. So soon, probably, that's the zone that we're going to see price come to consume liquidity before it pushes even up further. So in short, what I'm trying to say is on the dollar index, I am bullish for this week. I am bullish for this week to this level. Whoever has a different opinion will get a chance to share, because at the end of the day, people view the market differently. So to expect, okay, as far as I'm concerned, I'm looking forward to see the dollar come to that area. Yes, that area. And then from here, we're going to we're going to see if you'll go lower. So price will, of course, come and do liquidation. So let's check on the 4 hours time frame. So when you check on the 4 hours time frame, the aspect of liquidation. So there's this gap, of course, it has to be filled. And then we have these structures of liquidity that have not been consumed. So tuko na hii structure ya hapa. You know, these candlesticks, sometimes they confuse us. So eventually, probably price will come lower, those levels, before we continue with that direction, whichever the case. So for me, I'm bullish on dollar. So let's look at GBP USD, and then we shall look at USD JPY, and then we'll look at gold. So we can look at GBP USD. So I'll also do a recap for GBP USD before I do my analysis. The same. Let me just do a recap of GBP USD as well. We start from the higher time frame. Start from the higher time frame. Are we guys still following? Okay. Now, when you check your charts, when you check on your charts, let me start with the weekly time frame. Yeah? Clearly, you can see the market price was rejected from these levels, and that was a clear indication that price was going to sell. Although price reacted on these highs of, I think this was June 2025, with a week on the weekly time frame. Since this was our last internal low, and the market we had a body candlestick closure below it, this became a shift. After that shift on the weekly time frame, we had this area of liquidity. Other people call it an order block. Simple price action, bearish engulfing candlestick. My strategy, this is type 5 area of liquidity, right? Now, so price came back to this level, and we could see the market selling. But I want us to go to the daily time frame so that we can focus on the daily time frame. So on the daily time frame as well, you can see clear shifts. So if you go back to weekly time frame, guys, there's something a point I want to drive home. You realize these are like how many candles? 1, 2, 3, 4, 5, 6, 7. Those are like 7 weeks. But if you go to the daily time frame, it took a lot of time to come to this level. So you could probably say that these, based on the monthly time frame, this is like a pullback and then a continuational move. All right. Now, on the daily time frame, we had this bearish structure. From this bearish structure, this was our last high that was created. This was our last high that was created, major high, because we had a big break of structure down here. So that means this is where we had a transition of price from, like in this case, you are like the bearish move has ended. Now we're going for a bullish move, right? So from that level, we could see the market forming a shift. And after the shift was formed, price was going, the market was going for this structure, the area of liquidity, or rather the order block, those who use the word order block. Price was going for that structure to consume liquidity. So there is what we call FTAs. FTAs is all about using different timeframes to have confirmation of structure shifts or structure continuations. It depends with what you're looking for. So wakati price ilikuwa inakuja hapa juu, I mean after price imefanya shift, just a moment. After price did a shift, the market came to this structure here. My screen is hanging. Okay. The market came to, or rather price came to this structure. We had this structure, which was not mitigated. There's the aspect of liquidity. It's a whole topic on how price consume liquidities from different time frames. So price was to come and consume this liquidity. So when you are doing refinement, of course, this becomes our area of interest. So with the daily cycle, we go to 1 hour time frame and also check on 4 hours time frame. That's how we got this sell for last week as well. This is a recap before I do analysis for this week. So price ikakuja, kulikuwa na easy areas of liquidity, ilikuwa iko consumed, ilikuwa ishakuwa consumed na previous structures. So we had these. In this level, we have flip levels. And on the extreme end, we have what we call reactive liquidity engineering. So these structures here have also been consumed. So if you go lower, maybe to 30 minutes or 15 minutes, just for the purpose of a recap, if you go lower to 15 minutes, 30 minutes or 15 minutes, we have this structure here, which was not tested, but later on price was tested. So in the area ambayo ungechukulia trade, our strategy rules is when it comes to currency, the stop loss should not be more than 30 pips. So with this, you are safe. You could make it to be 50 pips. But we also had extreme levels liquidities where we had reactive liquidity engineering. If you turn it, it's normal, but it's more of reactive to me. So if you narrow down to 15 minutes, that's where you will see it. I believe, for me, I believe when you're trading, you should take all the pips. Kuachia broker pips. Why? Because for them, when they also find us, they smoke us very well, so hard. So you're supposed to take all the pips. So I saw an entry. I had two levels of entries: the green line and the liquidity engineering on 15 minutes, which was a reactive one on 30 minutes, 1 hour, but on the 15 minutes, it was a normal liquidity engineering. That's why I had my entry, the cells. That's why I had this cell. I had this cell for GU from that extreme level. And target is based on structure. The first target was based on this low because you're looking forward to see prices consume those areas of liquidity before it comes to the lower liquidity. So for this week on GBP/USD, for the purpose of having clear charts, I'll delete everything. So for this week, we have this area of liquidity. So we have this validation and we have this invalidation point. So since you're looking forward to see the dollar continue buying, I'm also looking forward to see GU getting deeper to come and consume areas of liquidities that are within this validation and invalidation point. Because clearly, we already have a shift. We already have a shift on the daily time frame. And there's areas of liquidity that have not been consumed on the weekly with the weekly rejections. So price inafaa ikuja ichukue hizi liquidity ziko hapa, kuna hii hapa haijachukuliwa. So since we have that, if you go to 4 hours time frame for refinement purposes, I'm looking forward to see price come to branch area. You can see you're drawing something. So we have this area. In terms of consumption, this one has been consumed. This is, okay, first liquidation. This is first liquidation after this structure, second liquidation. So we are looking forward to see price at least coming there. If you go lower, just to show you where liquidities are, if you go lower to 1 hour, I'm able to see, okay, these are pure bearish, pure bullish level. So tuko na hizi structure, hizi zimekuwa consumed, this one has been consumed, this one has also been consumed. So this is the structure that has not been consumed. 1.31976. So as far as I'm concerned, I'm looking forward to see GBP/USD. I'm looking forward to see GBP/USD continue selling. Probably we'll be monitoring charts. So, and then during the week, Tuesday, Wednesday, we'll be looking for buys. So I'm looking forward to see this continue selling. And my first area I expect a reaction is 1.32832, and then the extreme low. That's why I'll be looking for buys. So in short, I'm saying we're going to continue selling on USD quotes, and then USD basis, we're going to continue buying. All right. So that's why I'm looking forward to see price come to. So I'm still bearish on these pairs, and I'll be looking for buys probably So if I'm intraday, I can take some slight buys from either 1.32832 or 1.3197. So tutaobserve venye market itafunguka, then we'll be able to make decisions. So structure is what communicates to you. So if I refine these levels so that we look for the next ultimate buys, if I refine these levels so that you can look for the next ultimate buys, we can go to 15 minutes. My entries are always based on liquidity engineering, and we have like 6 types of liquidity engineering. If I refine lower, I'm able to see impure liquidity here, and price did tap there, and then lower below the impure liquidity, I'm able to see. So this we call this this is type 6 entry model. So I can have my entry here. So this is going to be my perfect area for entry. So if I go back to 4 hours, you're going to observe that the entry is on the wicks. So hiyo ndio area nitakuwa na expect kutafuta buys. You know, when it comes to entries, we have the aspect of confirmational entries. We have the aggressive entries. It depends with you as a trader. So in short, GBP USD will still be looking forward to see price drop lower. If you measure the pip range, that's like 140, which is good pips for currencies. So then from here, we'll be looking for buys. That's like 480 pips to the upside. So that is my analysis on GBP USD. So finally, because of time, if I give others 9, let me talk about USD JPY. So when you look at USD JPY as well, starting from the higher time frame, weekly time frame is already communicating to us. Price was supported here a couple of times, and then we could see this momentum candlestick. This was April, the week of 27 April. We had that momentum candle to the downside. If you narrow down to the daily time frame, we see the momentum clearly. So since we have this transition here, kuna transition, but the transition kwa daily time frame ijakuwa confirmed na week na body closure to the downside, ndio a good shift. We have this imbalance, and this imbalance is an anytime you spot break of structure, and with that break of structure you have an imbalance, it will always give you, based on experience, it will give you high probability setups. So I'm looking forward to see USD JPY as well to buy, probably towards these extreme levels, to consume all the liquidities, maybe before we look for sales, right? So I'm looking forward to see prices continue to buy to that up level, and we have this weak overlap together with a pure bearish structure, but to the extreme highs, we have a type of liquidity we call type 1. So this is the area I'll be interested so much to refine and have sales. But 159.556 is also significant because this is where we had the momentum kicking into the downside. So inamaanisha kwamba price itakuja kureact hapo. We're going to have some reactions here, but I'll be interested to look for probably sales from the extreme up, so the extreme end. So I'm bearish on USD JPY as well. I'm bearish on USD JPY. Sorry, I mean I'm bullish towards this level, and then I'll be looking for sales depending on what the market communicates to us. Depending on what the market communicates to us. Here we have a very nice flip level. So also we're going to have a reaction here, but I'm not really interested to take all these moves. So my areas of interest ni uko juu. So inamaanisha once the market opens, for the intradays, we'll be looking for structures that will give us bullish setups towards those levels. We're going to be watching that throughout the week. Tomorrow in the morning, I'll be dropping out specific signals and entries. And then finally, let us look at gold. Let us look at gold before I give others a chance to say something. Gold. Okay, on gold, I'll just go to specifically to the daily time frame. So we have these point of interest. These were the crazy momentum kicked in. If you zoom very well, you're going to see a bullish candle here. If you zoom it very well, there's a bullish candle here. So tuko na hiyo point of interest. Then to the downside, from this level, we had impure liquidity, and that's why price had tapped here the other previous weeks, the first week of this month, the previous weeks, before we could see this price pushing up. And then from this level, price was reacting from here because we have a type of liquidity that is type 5 on the daily time frame. Now, the market consumes liquidities from one time frame to the other. We have what we call top-down analysis and down-top analysis. Down and down-top. Price creates liquidities from seconds to minutes to hours to days to weeks. So whatever you see on the higher time frame, you can also see it on the lower time frame. So if you come to the intraday time frames, that's 4 hours, you clearly see that we have to investigate the aspect of liquidation. So starting from this low, after price creating this high, right? It created this low, and then created this high, then a low, and then high. So the market came and consumed the liquidities that were here. Are we together? From that, we see another reaction. From this low, we see this high. This low, we see this high. So price from this high, price came to consume these liquidities on this structure. We also see price coming to consume liquidity on this structure. Also, this one was consumed. This one was consumed by these wicks. And then there's the all of this area of liquidity, which was consumed by the all of this move and all that. Now, when you investigate the lower side, when you investigate the extreme lower side, when liquidity consumption is happening, price is supposed to touch, for full consumption, it's supposed to touch on the bodies. So in the 4 hours time frame, 43.80 is my next level. If this week gold is gonna continue selling, 43.80 is my next level to consider for extreme buys. But nataka tusikie vizuri sana hapa, price ilikuwa ishaanza create liquidations za kutuonyesha kwamba tunaenda buy. This was from last week, this was our area of interest in terms of looking for buys. In terms of looking for buys. If I go back to the daily time frame, this low has not been taken out, but price has reacted on this weak overlap, which is a key level, and the candle body is below it. Are you together? So as far as the intraday time frame is concerned, you're supposed to buy from here if you go to 4 hours, because we have a structure there. But what the market has done, it has not yet. We could see we have candles that have closed below this. So I'm looking forward to see for gold, based on the structure I'm able to see right now, I'm looking forward to see probably market retraces to this level because you have impure liquidity, right? Depending on how the fundamentals are, I'm going to observe what happens once the market opens. So I'm looking forward to see gold retrace to this level before we continue. I know that people like buying gold. Whenever they see sales, they get frustrated, because they're interested in just buying gold. Anyway, so this is what I'm looking forward to see price doing. There is this impure liquidity on that specific level. If you go back to the daily time frame, we are still within this range from 47.74 and 44.98. So two things that will happen based on my understanding. Two things that will happen. we are interested with the money. And how do we make our money? For pips. Ukimesha kutoka hapa mpaka hapa, hizo ni pips ngapi? 1,240. This is enough. If you enter with one lot, that is $12,000. If you enter with 0.1, that is $1,240. If you enter with 0.01, that's like $124. That's how I calculate my moves on gold, depending on the size of your account, your risk appetite, and other factors. So since hii level kwa daily haijakuwa invalidated, kwa daily area haijakuwa invalidated, I mean hii low haijakuwa invalidated hii hapa chini, so we might and ukiangalia vizuri sana key level imekuwa tapped, we might be buying, and our first target is supposed to be on this level 46.61. 46.61. So since hiyo level kwa daily ijakuwa invalidated na price imetap kwa ki level ya daily, na tunaona hapa kuna rejection, alafu kuna hii candlestick, although it has not yet closed above this one. So if we check on the 1 hour structure, 1 hour structure is still showing us some sort of a range. So for you to be safe, this is what I'll tell you, gold. For you to be safe, we have this high, low, high, okay, low. So for you to be safe, you have to wait for this. We have to wait for the candlestick on 1 hour for price to close above that candle, so that you can start looking for buys. Don't be in a hurry to buy, you will be surprised. 45.72 will be an ideal area for you to have a confirmation of pushing to the upside. So you have to wait for that area to be closed on 1 hour. Ungoje candlestick ya 1 hour ivunje hapo, ndio uanze kutafuta structures za liquidation za lower time frame below 30 minutes, 50 minutes, that will start delivering you to this area before we go to the next area, which is here, probably on the impure liquidities. Are you together? And before that, just know that we are still bearish on gold. Before this, we are still bearish on gold. Now that the state of our moves, okay. So before that, we are still bearish on gold. Don't be in a hurry because you are just seeing this swing point, you just think of buys. The best way, you have to wait for price to close above this, and then you can take buys to this level, because those pips are a lot. But that's the pullback we can take. But I'm gonna still maintain bearish move. And my next target is 43.80 something, 43.80 level. And that's a guideline that is coming from 4 hours, which is a key level on the daily time frame. 4 hours structure, area of liquidity that has not been mitigated, key level on daily time frame. Let me show you. I hope you iko clear. So hizo ndio areas mimi nitakuwa naangalia this week. 43.80, either I'll buy from there. For this area, for me to buy from here, I have to wait 1 hour candlestick to close above this. Then I'll take some slight pullbacks, probably before we embark on continuation of sales. That's what the structure is communicating to me. Is there anyone who has a question up to that point? I know I've said a lot of things. Let me just do this. Anyone who has a question?
Hello.
Anyone who has a... Yes, who is speaking?
I have a question. So like in time frame, like do you have like time frame alignment? Like you can start with 1 hour, like our daily, then you proceed to lower or like do you have a specific time frame alignment?
Yes, I have. These are the cycles I normally use. I hope it's clear on the screen. I follow these time frames for my analysis from higher time frame to lower time frame till execution. I focus so much when it comes to swinging. I focus on these. When it comes to swinging, I focus on these two. Intraday, these and below. Scalping for me is 30 minutes and below. Any other question? Any other question, guys? I need more questions. I'm gonna spend a few minutes before we wrap it up. Any other question? Any other question?
I believe what wako sawa.
Hello, coach. Hello.
Yes.
Tunakusikia.
Yes.
Ni Elvis. Kanasikika. Coach,
Yes,
can you hear me?
Elvis. Yeah, we can hear you.
Yes, I was looking at gold.
Mm-hmm.
Nimemake a comment nikakwambia check the 30 minutes but ideally nimeweza isema tu.
Oh, okay.
Rudi hapo kwa hiyo the 4-hour structure ni try to deliver something.
All right.
Okay, from the 30 minutes I was actually looking at that your area bado for further sales, your first area where we had the break of structure, our initial break of structure at 30 minutes hapo.
Okay.
I was looking at that invalidation point that was not fully consumed for more sales because naangalia your point. That was what I was looking at, either that or huko juu kabisa. Because ukiangalia kwa the 4-hour time frame.
Mm-hmm. Yes.
We had something that I think tunaweza call a strong BMS. Price ilishavunja the low kwa the left side. Niko kwa the left side. It already broke. Yeah, ile iko hapo. Yeah, tulikuwa to take our we had something, a strong break of market structure hapo. So I was thinking price inaweza panda kiasi ukuje hapo kwa hiyo week yenye price iliacha, then we can proceed with the sales. Kama si hapo uko juu kabisa kwa the liquidity.
Perfect. Actually, that's what I was telling. Perfect. I like that. That's what actually I was telling you guys. Don't be in a hurry to buy gold. There are people just like buying gold. So maybe to refine this level.
The invalidation for 30 minutes.
Yes, tukiangalia levels, tuko na structures ambazo hazijakuwa consumed. Now one of them is this one here. For gold, I like even going to 1 minute. Let's just check 3 minutes before we go to 1 minute. Perfect. So hii structure ya hapa imekuwa hii hapa. Has it really been consumed? The body is low. So this one, we have, okay, let me just say between 45.76 to 45.88, those are good zones to consider for sales. Can go to 1 minute. Just check. What do we have? Kama kuna liquidity engineering, tunaendea. Perfect. We have liquidity engineering here. So that's the best area for you to sell. Nowadays, my sell for gold is 50 pips, but for the last weeks, I've been checking things are getting better. Trump ametulia, he's been messing us big time. So nowadays, I normally use 50 on gold. That could be a potential good level for sales. Maybe if you go to H4. Yeah, it's a very good area for sales. But I'll not be in a hurry for this week. I'll not be in a hurry for this week to execute trades. I'll be very patient. I mean, tomorrow, I'll be very patient. And then this week, for the next 3 weeks, I'm doing a challenge. It's a personal challenge if you want to join me. I'm flipping $100 to $10,000 in 3 weeks. So come uko interested, any personal, you can join me. I'll give you the guidelines. I'm gonna flip $100 to $10,000 in 3 weeks. Anyway, as we wrap it up, I want to make some important remarks. All that you have said does not make sense if all that you have said does not make sense if you don't have a plan. And when I'm talking a plan, when I'm talking of a plan, I'm talking about risk management. I'm talking about execution. No, where is that trading plan? All that I've said will not make sense if you don't have a plan. Sawa sawa. All that I've said will not make sense if you don't have a plan. All of us can never be swing traders. We are different. But for those members who are in my inner circle and Discord as well, I'll be dropping ideas. I think I narrowed down to my watch list. I shared with you guys, this is my watch list for 2026. So I'll be dropping out trading ideas back to back, continue with the trading activity. Sawa. And then the other thing, this week on Friday, all those guys who are in Eldoret, I'm only having 25 seats on Friday. We're going to have a meetup where I'll be breaking down some things. Shall be doing live analysis together, and we'll be able to as well execute trades together on Friday next week. So come up wealthy, and you really want to join us, giving first priority to members of the community. Friday, the whole day, but we can meet from 12 or 1. The location, I'm not going to share it publicly because it's not for everyone. So come up interested to join, just DM me. If you're a member of the community, please make sure when you reach out, kama una namba yangu ndio hii hapa, please make sure you reach out to me. There's a special thing I want to do for you guys. 762. That's my number. Make sure you reach out to me. Those who are in LD. Basweti. Text me, nikushikie seat. I only have 25 seats. 25 seats. We're going to have a discussion. There's something I'm starting about accountability and professional growth in trading. I really want guys to build this trading stuff as a career. So it needs a lot of, deep mentorship for you to, learn and do all this. So up to that point, I'll say this. Anyone who wants to say something? Angela, and let's see, is Job around? Esther. Belly, are you guys around? Silence means oh, there's a question. Sage. There's a question. What is an imbalance? Please answer that question. Irene is asking a question. What's an imbalance?
What's an imbalance? So, for an imbalance, it means that, okay, come on, you didn't understand liquidity consumption to dumb it down. If you didn't understand liquidity consumption, to make it as easy as possible, it is an imbalance. It means price has not filled a specific area. Like there was an aggressive move and an area was left unconsumed. So price will come back to fill that area. So an imbalance is an area that has not been filled. That's why you hear people in ICT called a fair value gap imbalance, because there's an area that has not been filled by price. So price has to come back to that specific said area. That is what we call an imbalance. So for ICT guys, they technically mark the week or the candle, and then they say this is a fair value gap. But for us, we go to a different time frame, then we see if we have a hidden area of liquidity inside there. Okay, so we get to see there's an area of liquidity there. If it's a deviator or a deviator, depending on what, or it's just a hidden area of liquidity. Yeah, so that's technically what an imbalance is. Karen, ujanisikia vizuri? Kuna mtu yoyote ajanisikia vizuri apart from Karen? Kindly. Okay, not clear to see. So saizi mnanisikia better? Yes, but breaking. Yes, better. Okay. So an imbalance is considered an area where price has not gone and filled that area. So when price decides to go back to that area to fill the specific said imbalance, then we will say that price is going to consume liquidities left in that area. So that is what we call an imbalance, an area that still has liquidity that has not been filled by the price. Kila mtu ameelewa hiyo?
For example, when you look
I
at
think
what, for instance, guys, when you look at, let's just focus on this structure for 1 hour. Let's say a place like this. See this area. So this becomes an imbalance. We have a break of structure here to the downside, for instance. Don't get me wrong, because this is like a shift, but let's say this is a BOS to the downside. This is the candlestick that broke below, right? If you come to this level, we have an imbalance. We have an imbalance. So if I go to 15 minutes, I can refine it better. If you go to 15 minutes, in fact, this will be the best example. There's something I'm supposed to teach you guys. Okay, just a moment. So, well, I'm looking for screening. Yeah. So for example, yes, this is a BOS to the downside. Then, if I cut this, Sage.
You got it here on another time frame.
So No, I want to just show them this. There's that concept of reflex candle, blah, blah, blah. Something. So,
Open break.
so tukikuja hapa, after hiyo price imevunja hapo, hapa tuko na imbalance na iko na impure, so inakuwa area poa ya kupata entry. Inakuwa area poa juu tuko na imbalance. This becomes a good area for entry. That's why you see price dip kuja katapa hapo like a drop. We'll line all these weeks. Yeah. Anyway, we're gonna do that as we go on. Anyway, we can end our session here. We are back every Sunday. Tomorrow, Monday, we shall be live on Discord, 9 sharp in the morning. We shall be dropping the intraday entry ideas across all the assets that we trade: gold, BTC, the JPY pairs and all that. So naomba tumalizie session hapo. Just for the last time to remind you, this Friday in Eldoret, that will be on 22nd, we are having our traders meetup. It's going to be a learning session. I'll also be talking about the aspect of accountability as a trader, whereby I'll drop out a journal that you guys will be using to be accountable to yourself, and it will help us to trace and track your progress and get to know your weaknesses as a trader, right? And then the other thing is I'll be giving out some important information. That's why I'm not giving out the location publicly. If you want to be there, giving members of the community priority, make sure you inbox me. If you don't inbox me, kose kiti, itakuwa ni shauri yako. Sawa sawa. So you guys have a lovely night and have a beautiful week ahead. See you tomorrow.
Ciao, ciao.